Hello, it's Thursday, April 29th. This is Andy Aiken, and Victor is unable to be on the call today, but he did ask me to do a brief coverage of the markets. And so I'm going to spend some time talking about uh, both traditional markets, SPX, and some of the other stock indexes, as well as bonds. But then I'm going to spend a little bit more time on crypto today than we did yesterday, and I'm going to cover uh, some of the sites and resources that I like to use to identify trades. Uh, so today we finally saw the SPX punch above 4,200, which was the constructal level that Vic and Yelena were looking at last week. But this week we saw it tap that level, or nearly tap that level twice from underneath, and it wasn't able to punch through until today, and it closed at 4211. And this evening, it has pulled back a little bit with ES just a little bit below 4,200, but that's not unusual for a market to pull back that way after it punches to a new high and it goes above a critical level. So this it waits to be seen. We're maybe a little bit extended, and it's had a very nice rally here over the last few weeks. So it may want to pull back a little bit, but we did punch to a new high, and so that's usually a very bullish sign for the near term. The other thing that I would point out is that today bonds did pull back a little bit, and so we what that means is if using the designations on daily speculations, the way that Victor likes to look at it, it's a yellow day. So we had SPX up and bonds down, and so that's a yellow day. Same thing. These were the long bonds. Same thing with the 10-year that we also saw a bit of a pullback, and if I can get that, and so there was a bit of a rally off the low, but now we seem to be pulling back off that level, and the um, it grazed the 50-day moving average, the bottom of it, and seems to be headed down from that level. So the maybe the one other thing that I would touch on would be some of the commodities, and uh, those were generally uh, up a little bit. If I can get my charts working here. So some of these, I think my current chart isn't quite right, but we did have uh, gold that was up very slightly today, and a little bit slow today. Gold, it was up just almost flat, really, and then silver that was down about 0.25% today. Crude has had a nice rally, and it pulled back a little bit. So we're sort of at when we look at some of the agricultural commodities, they also I think my corn chart is showing some big pullbacks from from the from today, but I don't, but that doesn't appear to be right. So we've seen continued pullbacks also in soybeans and soybean oil, which have been rallying really nicely lately. The one other one that's been really flying has been lumber, and if I have that chart, it's it's a very liquid market at times, and so it can be a very choppy market, but it's just been an incredible rally here from mid March. I'll lock limit up almost every day. So so what I will do is talk a little about the crypto markets and what's going on there. There's been some really interesting action there. So the first one, let's look at Bitcoin. Bitcoin is an interesting story. We've had a top in Bitcoin that was just under 65,000 back here on April 13th. And from that point, it was almost every day down going into the 25th of April or 26th. And so there's just really a few days ago, earlier this week. Then on the 27th, we had a really strong rally, and it's seemed to have pulled back a little bit. But this evening, it did start rallying pretty nicely. So I'm thinking that we might have a pretty good rally in Bitcoin here over the next week or so. Maybe another down day here over the next few days, but then possibly a nice rally that might take us above this this 56,500 level, which is where we stalled out a few days ago. So with Ethereum, and it's a slightly different story, because what's really been going on in crypto markets is there's these cycles that occur. There's the traditionally the cycle is that Bitcoin punches to a new high, and then the alts or other crypto follow, while Bitcoin may stall out. And we've seen the stalling out. We've seen, but where we've seen a really strong rally here in the last week is in Ethereum. And that rally has actually been going on for a little while. And what I mean by that is, if you look at Ethereum against Bitcoin, then it's rallied from really the beginning of April, end of March, from Ethereum Bitcoin ratio of just under 0.03 all the way up to 0.05. So that's huge rally. Nearly 2/3, 67% rally against Bitcoin. While Bitcoin has been sort of chopping around during that time. It did punch to a new high, but clearly Ethereum, it's had a pretty strong run here, and it looks right now to be punching to a new high, or very close to a new high, which it just hit today. The last few days has been a new all-time high each day. So maybe some others that I like to look at if I'm looking at the overall shape of the market is I really start breaking it down into some different components. I think it's Bitcoin and then Ethereum for me, just because those are some of my key portfolio components. But I think that after Ethereum, it can be good to look at some of the other smart contract platforms like Polkadot, which is USD. And so what you see here, the pattern is very similar to that of Bitcoin. It's sort of at a low here the same day that Bitcoin had a low, and now it's been bouncing off that low. So it hasn't really rallied like Ethereum, even though it may be more similar to Ethereum than it is to Bitcoin. If you look at the Polkadot chart against Bitcoin, then get that up. So here, then it's actually been rallying a little bit stronger than Bitcoin. So on a relative basis, it's been outperforming a bit. And actually, if you look at it against the Ethereum chart, then it's even today, at least, it's been doing better than Ethereum. But it's been very hard for really anything, no matter how strong it is, to outperform Ethereum, given that rally against Bitcoin. So I'm going to skip over the charts, Cardano and Avalanche, but those are interesting ones to look at times. They're a little bit smaller. The so maybe those are the key ones that I'll touch on, but I'll also show you some different screening tools and other tools that I like to look at. I think that depending on what your trading style is, it can be good to keep, even if you don't want to trade it, to keep track of some of the smaller coins and other projects. And because what often happens, what we saw when, for example, the big bear market from 2018 through, really, it didn't end. You could say it ended at the end of 2018 and then bounced, but really it had a secondary low in March 2020. So as we headed into that COVID panic into March 2020, but then also all of 2018 was very bearish. We saw first the flow of money out of crypto, so everything fell, but we saw also a flow of money out of pretty much everything else, Ethereum on down, back into Bitcoin. So Bitcoin was a better store of value during that bear market, and often during bull markets, just like in the stock market, where you have smaller issues, small cap stocks tend to rally, and then when there's a bear market, it becomes more defensive, and there's a flow back into more defensive stocks. In a way, that's the nature of the market in crypto, and I expect that to repeat just at a macro level. That when crypto heads into a bear market or has a really severe correction that goes beyond the kinds of corrections that we've seen this year, I expect a flow of capital back into Bitcoin, maybe Ethereum to some degree, but really it's sort of the kings. The king is what takes the capital when there's fear. But what you can see, if you look at these, I'm looking at a particular tool called Sorry, and I like this one because it's they have a lot of data that if you buy one of their services, which aren't that much, like $100 a year, which if you've got a decent sized portfolio, that's not that much for an information service, then you can get a lot of data on these different projects and different coins. And I've just sorted it here by the market cap, so that it's not any kind of quality rating or anything like that here. But there are some quality ratings that you can use, and I don't have them pulled up here, but it does have things like sector information and so on. But what often happens is, and where there's a lot of speculative energy in crypto, is with there's maybe two areas where there's a lot of speculation. And the first is in what I would call meme coins. And a perfect example of that is Dogecoin, which is here near the top, and number 7 right now. And so that's an amazing story that you can find a story online, a number of news stories in like Forbes or Fortune. But it was essentially started as kind of a joke that with the Doge meme that was used, that didn't have anything to do with crypto, and then there was a coin that was built around it, around that meme, and it sort of memed its way into being a $40 billion coin. But I wouldn't rule it out as entirely a joke, because what it does tell you, and yes, it does get a lot of attention of people that are retail traders and non-crypto people, but it does tell you something about how frothy the market is. And so one of the things that we've seen is that although it to some degree it's followed the pattern of all of crypto, or of Bitcoin to some degree, it's interesting to see that like for example, if we look at the chart, then there were two big bumps, and the first one was back in way back here in January, and I'm logging it. But the first one was way back here in January, where then into early February it had this huge rally from less than 1 cent up to 5 cents, so something like a 500% rally. And then another big rally here from in April. And since that point, it's sort of tapered off. It has been this sort of stair step. And but in my view, it's kind of a contrary indicator that the more this goes up, because there's not like a lot of development behind it, and it's not like people are going to build a new financial system on it, or like a bank is going to want to do projects on this, or even just a software company. Unlike Bitcoin, unlike Ethereum, where there's a lot of activity going on and development. So that's really the name of the game. But what they do have is a community, and that's a big driver in crypto. So it's not entirely negative, but it is to some degree maybe not so sustainable in the long run compared to projects where there's development and there's exciting things going on that might make the future value more than what it is today. But just going back to the screener, so I think that's one thing to look at. But then there's a lot of maybe the other thing to look at is there's certain things that are uncertainties within the market, and they so like for example the let's see if I can get this scrolling properly. There may be some ways to think about the market would be that these sectors, for example, there are currencies like Bitcoin, which I'm backing. There's smart contract platforms, but then there's what they call here centralized exchanges, but really Binance is both a centralized exchange, as well as to some degree they're trying to compete with Ethereum, and that's really been the reason for this incredible rally that they've had in the last year, is that as Ethereum fees have grown very large, they've tried to capture some of that smart contract business, and maybe they've gotten some of it, but they really rallied as a result of that. But it's really owned by this is an exchange and a company that's owned by a very small group of people, and so it's not like even like Ethereum, which is relatively decentralized and distributed, or Bitcoin, which is entirely decentralized. So, but then there's others like maybe that are more similar to Binance, like a Ripple coin, and then there's still others like Cardano, Polkadot, and so on that are competitive smart contract platforms. Then there are projects like a Uniswap and a Chainlink, and these are built on the Ethereum platform in this case, and they are trying to they provide some kind of utility. Like Uniswap is an exchange, but my the reason for me showing this is to say that if you're going to if you want to really invest in crypto the way that bring the way an investment professional approach to investing, or a winning approach to investing in crypto, the same way that you would in the markets, then yes, it's good to trade some of these things, but I would also suggest thinking about building a bit of a portfolio that's built to last, and So Bitcoin is really the foundation of that. And then I think that having an allocation to a smart contract platform or two is a good way to capture some of the growth and some of the adoption by both retail investors and institutions. And the one that I think has a very high potential is Ethereum. It's proved itself, but there are definitely cases to be built for Cardano, Polkadot, and some of these others. I wouldn't rule them out. So, but then I think thinking about some projects like a Uniswap or some of these other projects, Chainlink. These are projects that will own a piece of that future financial system puzzle, and so they're worth doing some DD on and investigating. In any case, that's what I wanted to cover today, and I'd be happy to answer questions in the comments. But thank you for watching.